Good day. Dan Davis, President and co-founder of ADK Wealth Advisory Group and co-founder of Financial Planning World. Welcome to our market update Q1 2022. Our focus today really is synthesizing what's going on geopolitically with financial markets. So I'll kind of start with geopolitical, which is really Russia, Ukraine, China, Taiwan, and then blend it into financial markets. So as I was sort of formulating my opinion of what's happening right now, I was kind of hearkened back historically to the USSR. And as I really studied the history of it, it was surprising to me that at one time at their peak, they were the largest land mass of any country in the world and the third most populated. If you take a look at power, control, influence, prestige, that's all of the above. But by the time 1991 rolled around and the USSR had collapsed, all of that was in shambles. And there's a map that we're showing right now that gives you a pretty good idea of the USSR versus Russia modern day. And it was interesting as I sort of looked back historically even further to World War I, and you take a look at the power and the sphere that Russia had moved into north of it in Finland, west of it in the Ukraine region, and then the southeast into the countries that I call the stands. And then at the end of World War I, a treaty was signed called the Treaty of Brest-Litovsk. And in that treaty, Russia was forced out of those areas. And then as the Bolshevik Revolution took hold, Lenin eventually washed his hands clean of that treaty altogether, leaving those territories back in play. And again, looking at the map, you can kind of see the sphere that over the following decades that Russia was able to take control of. Now you'll notice north, Finland, etc., was able to repel them. They weren't able to take control of that area. But the stands, Romania, Moldova, Russia, all that stuff, Russia had moved into. And why Ukraine, why now? So Putin, again, power, control, prestige, views the fall of the USSR as a humiliating period of time and wants Russia's greatness to be world renowned. He's moving, taking control. You heard me do a video back after they invaded Georgia and Crimea some time ago. You heard me say that they're going to continue to move into those Soviet bloc countries. This is another piece of that move. Specifically Ukraine, if you take a look at it, it's the breadbasket of Europe. I mean, the amount of wheat that they produce alone is staggering. Not to say anything about all the other resources relative to the fact that, number one, they're the 10th largest producer of steel. There's a ton of minerals and ores that are used in military defense as well as technology that Ukraine has. So it's a great acquisition for Russia. I hate to be crass, it doesn't really affect the global economy terribly whether or not Russia is the one responsible for benefiting from those sales or Ukraine. It's really big for the Ukrainians. I think the bigger issue is NATO's response is a big deal because now you're taking a look at China. How do they view Taiwan? And again, going back to World War II, you see America backed Chiang Kai-shek. Mao Zedong's regime pushed Chiang Kai-shek post-World War II into Taiwan. And again, that's kind of an insult to their prestige and their power. And Xi looks at that as theirs, being encumbered by the West of being able to have something that's theirs. And so you get this tension between the West and other powers, thus the geopolitical risk. And it sort of reminds me a bit of the bully at the school lot. And the more you leave that bully unchecked, the more fear-mongering they do, the bolder they become, and the more fear you have on the school parking lot. To the degree that someone steps up to them and pushes back really hard, you normally find that the bully's not nearly as tough as what everyone thought. If you look at the history of Europe and the United States, I would say that it would be my opinion that the way I interpret it is that they'll tolerate through passivity or isolationism, aggression, until there's a certain tipping point that happens. And that tipping point's got to be pretty aggressive. I mean, you look at World War II, what the Nazi regime was able to do before the powers to be really started pushing back. It's kind of shocking in hindsight. But people don't want to fight, and I get it. But the reality of it is that when you have a bully, if someone doesn't step up and push back pretty hard, that bully's going to continue to do what they do. Now, what's the right answer for the United States? I don't know the answer. I'm not a politician. But if you take a look at the sanctions that they put in place, it kind of reminds me, if I have 10 cars and I do something wrong and I can't use 3 of them, but I still have 7, it's really not that big of a deal. I've not really been punished for anything. Now you take away all 10 of my cars, and then you take my friends' cars away, and now we're having to walk or not move around. That's a pretty big deal. I liken that to oil and natural gas. If those sanctions are not put hardcore on Russia on those things, then sanctions are somewhat meaningless. Now I get why France and Germany don't want to do that right now, because it's cold. And if they sanction those and shut them down, the people are going to freeze throughout the rest of winter. Chances are they don't get reelected come election time. But if we don't deal with that in the spring, then I would just isolate. I would categorize that as passivity and isolation, and Russia will continue to move on. My bet is that's what happens, is that Russia continues to move throughout the Russian bloc or the Soviet Union bloc over time. Unchecked would be too strong of a word, but unmolested would probably be the phrase that I would use. And then I would say that that emboldens China towards Taiwan. How all that plays out, I don't know in timing, but that's my opinion, is that that continues to move on in that direction. Now, what does all that mean to the financial markets? We're videoing Monday, February 28th in the afternoon, and as of right now, 95% of the S&P 500 has reported earnings and revenue. Pretty interesting in that about 31% earnings per share growth compared to 22% expected, and about 76% of those that have reported have exceeded expectations. I would say that's really good. The other thing is that when you look at not just earnings per share, but more top-line revenue and sales. Revenue's up about 16, sales are up about 3, and you can sort of say, okay, well, some have made, some have missed. What's the bottom line to it? And you could say that earnings per share across the board up about 8%, sales growth up about 3. So we're growing, but compared to the last several quarters, we're growing at a lower rate, decelerated growth. Very indicative of what I would classify as mid-cycle. In mid-cycle in the economics term, historically means increased volatility in the stock market. We're certainly seeing that. High single-digit stock market rate of returns, which is what I expect if we look at 3-year blocks of time. Doesn't happen every calendar year, 3-year blocks of time. But again, that volatility doesn't make that feel very good. So if I were going to sort of summarize all that, we're mid-cycle, we're having choppiness, and we expect that choppiness to still result in high single-digit stock market rate of returns and 3-year averages. We sent out a piece in January, wasn't a video, and the reason we sent it out is that we hadn't seen volatility in a while. And the summary of that piece was, in mid-cycle, you should expect, when you have market volatility average historically down to up, so peak to trough to peak, about 4 months. Some of that does not have geopolitical problems like we have now, some does. Historically, the geopolitical stuff adds about 2 months. That 2 months is blended to the 4. I would say it's realistic to think that we're somewhere, recovery somewhere between late April to mid-June. Now that's saying that we don't have increased geopolitical issues like Iran or China attacking Taiwan. There's no way to bet all that. So I think the key thing is to do nothing rash. We'll continue to be paying attention to it. We'll be vigilant on risk management. And as I wrap up, I just want to say thank you very much for the trust that you place in my team. Take it very serious. If you have any questions or concerns, just reach out. We're here to help. Signing off from our St. Louis office, thank you very much.